without further delay, let me welcome each and every one of you to the DBN Webinar series on alternative financing options for sustainable growth post-COVID-19 lockdown. So good afternoon, ladies and gentlemen of the panel and audience members from all over the world. I'm delighted to present to you what I know will be an interesting discourse on alternative financing options for sustainable growth post-COVID-19 lockdown. But before I jump right into the topic, let me start by introducing what I know is a dynamic panel of discussants. First of all, with no particular order, of course, we have Mr. Andrew Alli. Andrew was most recently the president and CEO of African Finance Corporation, a multilateral financial institution focused on improving Africa's critical infrastructure. Currently, he serves on my board of DBN as a non-executive director, and he is the current CEO and partner of Southbridge Group. Welcome to the show, Andrew.
Thank you very much. Just check that my phone is not on mute. Okay, thank you.
Great. The next person we have is Mrs. Toyin Sanni. I will tell you this. This lady, she is a woman of many hats. She's an investment banker, a lawyer, a chartered secretary, stockbroker, and is the current CEO of Emerging Africa Capital. I don't want to keep on running down the list of accolades she's taken through the day. I'll stop right there. Mrs. Toyin Sanni, welcome to the show. Toyin, are you there? Okay, maybe she's still on mute. The next panelist we have on the show is Mr. George Ogbonnaya. George currently serves as the group head of banking business of FCMB and is an industry expert with numerous years of experience in the SME lending space. Welcome to the show, George.
Yeah, thank you so much. I'm happy to be here.
Thank you. And last,
and if I may speak now, I'm happy to be here. I'm sorry about what happened earlier. I just simply couldn't unmute myself. Thank you very much to DBN, and thank you for having me on this.
All right, Toyin, nice of you to join us. Last but certainly not least, we have Hajiya Aminu. Sadia currently serves as the MD CEO of Urban Shelters. For those of you guys out there who don't know about the firm, it's a property development firm with over 20 years of providing home solutions in Nigeria. Now, prior to joining the firm, she had a stint in the debt management office supporting the Director General and helped draft the Fiscal Responsibility Bill back in, I believe, 2005 or thereabout, and which was subsequently passed into law. Welcome to the show, Sadia.
Thanks very much for having me, and I want to congratulate DBN for kind of putting all this together, so really appreciate it. I feel slightly out of depth. I think all the listed panelists are very much in the finance sector, so I'm perhaps kind of a duckling out of water, but thanks nonetheless. Appreciate it.
You're welcome to the show all the same. Okay, so there's been a lot of talk about the Development Bank of Nigeria, so let me try to capture the essence of why DBN was established and our core objectives, and of course our product offerings. By doing this, I would hope to basically reduce the number of questions we may have regarding DBN funds, etc. Having said that though, the Development Bank of Nigeria was established by the federal government of Nigeria in collaboration with the global development partners to address the major financing challenges faced by micro, small, and medium enterprises in the country. To be sure, we have these key development partners in no particular order. We have AFD, which is the French Development Bank, AFDB, African Development Bank. We have EIB, that's European Investment Bank, KfW, that's the German Development Bank, and last but certainly not the least, World Bank Group. To be more specific now, our objective is to alleviate the financing constraints faced by MSMEs and also small corporates in Nigeria through the provision of financing of partial credit guarantees to eligible financial intermediaries on a market-conforming basis. To be sure, DBN also has a wholly owned credit guarantee company named Impact Credit Guarantee, which is used to issue those guarantees to respective banks. Specifically now, the product offerings we do obviously three things. wholesale lending to our participating financial institutions, which basically means commercial banks, microfinance banks, and other institutions that we deem creditworthy, that can access our funds, and so on and so forth. Also, partial credit guarantees, which I've already alluded to with our credit guarantee company, Impact Credit Guarantee. And lastly, we do technical assistance, capacity building to PFIs and the MSMEs in particular. So, in a nutshell, this is what the DBN stands for. This is what products we offer, and this is why we are here. We care specifically about the MSMEs, and this platform is used, in my view, as an advocacy mechanism to ensure the MSMEs in Nigeria understand that the DBN cares, and the DBN is here to serve them. Now, drilling down, before we drill down into the topic of discussion, I would like to basically guide the conversation by giving a review of global macroeconomic effects of the COVID-19 pandemic. There's no point of us drilling deeper into this conversation without understanding what happened, where we are currently, and where we plan to be going. To be sure, in 2019, the global economy experienced slow growth arising from uncertainties around escalating trade tensions, Brexit situation, commodity price volatilities, debt burdens in several major economies, fragmentation, of course, in the European Union, and rising anti-globalization sentiments and protectionism. Now, in 2020, the economic outlook was expected to be soft but yet stable. However, what went wrong? The world is currently facing what we now know as the coronavirus pandemic, or COVID-19, which has no doubt caused significant disruptions in economic activities. Now, the last count I recall, there are roughly over 3.9 million cases globally, of which 1.2 million have recovered, while about 270,000 thereabout deaths have been recorded. In Nigeria, drilling home, the Nigerian Center for Disease Control also reported over 3,500 cases. That's 3,500 cases, 601 recoveries, and about 107 deaths thereabout. There's no gainsaying that the risk of the global recession in 2020 is extremely high, because guess what? As far as we know right now, countries are already going through a recession due to the closure of borders and restriction of movements, which will ultimately limit the spread of the COVID-19. Health experts have opined that it's contagious and yet infectious. The truth of the matter is this: we have witnessed a combination of supply shock, demand shock. The Nigeria's economic performance can be categorized as slow GDP growth, falling crude oil prices, which ultimately implies that lowered revenue expectation, lowered stock market performance, and of course, rising inflation. So if we're to dimension that further, the direct impact of COVID-19 on the Nigerian economy, there's no gainsaying that the oil price, which is Nigeria's major source of revenue, has basically bottomed out. In fact, the last I checked, it was around sub $20 per barrel. Mm-hmm. We have non-oil experts estimated to decline by over $160 million this year. Trade with China is expected to be 20% of total imports. SMEs have obviously a lower savings propensity. As such, they're more likely a direct threat of losing their businesses. And of course, we can't escape further currency devaluation, or rather currency adjustments, as the regulators have put it. But drilling down, it is axiomatic that MSMEs are the engine that drives economic growth, given their sheer size and contributions to the GDP. Now, in this period of uncertainty, what has been done to alleviate the constraints faced by this subsector? Now, the regulatory response have been seen by strengthening the CBN loan to deposit ratio policy, creation of targeted credit facilities. We had talking about the regulatory forbearance, which grants banks to leave to consider temporary, if you like, time-limited restructuring of tenor and loan terms for businesses and households that have been most affected by the outbreak of COVID-19, especially the oil and gas, ag sector, as well as the manufacturing sector. Let's not forget the credit support facility for the healthcare industry, the interest rate reduction, and of course, extension of moratorium. All these things are the regulatory responses for the COVID-19 as it affects the country. But without me talking too much, I would like to pass it over to our expert panelists to share with us some of their experiences so far, what they're seeing from their vantage point, from their respective businesses, and what types of recommendations, if you like, they can proffer to the audience members who are listening in, the MSME participants, and so on. So I will jump right into it. Mr. Ali, please share with us some of the experiences you have faced, your firm has faced, given this shutdown and the COVID pandemic. Over to you, Andrew.
Yeah, thank you very much, and thanks for those insights. We're still going through the first and acute phase of the COVID pandemic. We're still seeing, as you mentioned, massive global shocks, both on the supply side and on the demand side. This is first, I think, manifesting itself in governments. And so, as you mentioned, I'm a partner and CEO of Southbridge Partners, which is a Pan-African financial advisory firm. And what we're seeing is many governments, discussing with us our support of them to try and figure out how to manage their fiscal space during and immediately after this crisis. I think one of the governments we were talking to was saying, look, we don't know how we're going to be able to pay our civil servants' salaries, in about 3 months' time. And this is because, all their tax revenues have basically dried up, given the lack of movement in the economy. So the governments themselves are facing a lot of trouble. This is magnified, I think, because most African governments are dependent on foreign currency. So if you are the UK or the US, you can sort of print your own money as it were, and this is how a lot of the bailouts are being financed by those governments. But we in Africa don't have the same space to do this. The international response has been positive and swift, and there's a lot of talk about providing facilities to African governments, and some talk about debt forgiveness along the way, which I think will be important. And when you come to Nigeria, this is very important because government spending and government is still a major player in the economy. We saw this in sort of the 2016 era when oil prices crashed and funds to government went down, which then affected the economy and ultimately caused or contributed to a recession. For private businesses, again, we're seeing impacts. Those impacts vary depending on what area you're in. If you're in anything to do with hospitality, tourism, transportation, you're in a lot of trouble right now. Most airlines are grounded, most hotels are empty. Again, we're talking to 1 or 2 hotel owners about, looking for working capital to restart their businesses after things open up. The other point I want to make, though, is that we're still in the very acute phase of this crisis. 2, there are going to be secondary and probably tertiary impacts. So just to give one example, banks have a lot of customers. Those customers are going to be impacted by the COVID crisis, which means that bad loans are going to go up. Bad loans go up, it means the capital available to banks is going to go down, which means that lending into the economy is going to go down, which is going to suppress, economic activity somehow or to some extent. So we are going to see further impacts. And this is, I think what's at the back of everybody's mind is that, come September or something, when we've passed through this wave of infections, things are maybe going to return to normal. But in fact, many things, no one really knows how this whole pandemic is going to play out. And there are certainly many people who are saying that, we're going to probably see second or even third waves of infection, which might require further shutdowns, maybe not quite on the scale of what we're living through right now, but there will be. So in all this, I think, one framework that I have seen, sorry, just one last general point.
Okay.
I think, as Prof was saying, especially in an African context, but I think globally, SMEs are likely to be hardest hit by this. They're less resilient than big companies. They have fewer resources. They have less access to capital, and maybe they're dependent on a smaller customer base as well. So in all this, if you are an SME, this is a framework that I sort of like to think about. So the first is, really to survive through the initial crisis period. You need to try and make sure that you have as much liquidity as you possibly can. And that you also look to stem any expenditures you have, just so that you can sort of keep yourself going through this period. Now may be the time to look at, tapping into any credit lines that you have. Sadly, obviously, at this point, it's going to be a bit more difficult for you to get new lines of credit, but if you already had some, now may be a good time to tap into it. Now may be a good time to look at raising funds in equity from whatever sources you can find, especially if you think that the crisis may get worse. The second phase is really about stabilizing your business. So once you've lived through the initial crisis, what can you do to stabilize your business and to bring it back into a sort of more normal operating framework? To move forward. So this would be sort of thinking about, how you've rationalized your costs, how you can reconfigure any operations that you have. So just to give you an example, Echo Hotel has suddenly started outsourcing its laundry services and its restaurant. So you can order takeaway from Echo Hotel. You can order them to come and pick up your laundry to do. So they're reconfiguring and thinking about their services. The third thing to do is to think about how you can prepare for growth. So again, these crises always end at some point, and afterwards we will return to a period of growth. And, this is where you can be well positioned to take advantage of that. But you have to be innovative in your thinking. I mean, it's likely that a number of things will change as a result of this crisis. This will provide both opportunities and threats to people. And if you are innovative enough, then you can actually take advantage of changes that have happened in the crisis and even expand your business. And then the final point is how do you continue the acceleration? And this is really about how you reshape your business in the long term to take advantage of whatever would be the new normal. So around this, I think you need to be trying to be ahead of the curve. You need to try and think for yourself. You need to be innovative. But you also need to have a clear vision of what your business is and where you want to go. I'll bring an end right now to what I'm saying to give other people airtime. But there's a lot more that could be said around this. Thank you.
Absolutely. Thank you so much, Andrew. That's a very comprehensive recommendation you've provided and trying to capture the essence of the discourse. Thank you so much for that. Now, I'm going to pass it on to Mrs. Toyin Sanni. Toyin, please, I want you to jump in on the discussion because I know you have a lot on your mind and you're itching to say something. So please go ahead.
Okay, thank you so much, Prof, for the opportunity to share my perspective. And I want to start by saying I'm totally aligned with all of what Andrew has said. And I'll take our own experience, the type of clients that we serve. And I'll start with the subnational governments in Nigeria who are our clients. And these were clients who, some of them had promised to deliver certain infrastructure to the populace, and we're in the process of raising capital to do this. And now that there are expectations, because the traditional way that they secure these obligations is through their drawings from the Federal Account Allocation Committee, the FAC accounts. And we all heard what the Minister of Finance had to say a couple of days ago in terms of the fact that the net oil and gas revenue accruable to FAC is reducing by 80%. The crude oil earnings for Nigeria declining by 90%, and so on and so forth. So one of the immediate reactions, of course, has been that these prospective issuers have had to take a pause, and then we start running the numbers again. And just when we think we have the numbers right, then the latest good news, as it were, comes again. And so the roller coaster ride in terms of the continued sharp drop in oil prices has really impacted that side of business. Now, with respect to other issuers, so some of the corporate issuers, earlier in the year, we had an issuer that issued a commercial paper, and that commercial paper was about 600% oversubscribed. And so they went the following week for the next issuance. And you will not believe it, from 1 week to the next, the situation so changed, the liquidity position so changed in the market, and the uncertainty also impacting investment decision making. So impacted it that the second issuance was then 50% subscribed. So these are some of the trends that we've been observing in the market. With respect to some of our private clients, it's not all been bad news. So we were engaging with businesses. One of them was in telemedicine. Another one is in health and fitness. And suddenly the outlook for some of these businesses, has actually gone significantly up in terms of the priorities of people all of a sudden that are changing and changing human behavior. So by and large, how has this impacted us at Emerging Africa? So at Emerging Africa Capital, we provide financial advisory services to issuers. We help them to raise capital. And like I said, some of these issuers are governments, some of them are corporate entities, your typical bank, but some of them are also SMEs and MSMEs, because we have a specialized SME desk. And the advice and counsel we're giving to our SMEs is all of what Andrew has said, but in addition, telling them to be prepared to reinvent their current business. The phrase that I would like to use is you need to COVID-proof your current business model.
That's a good phrase. In fact,
absolutely.
That's the phrase of the day. COVID.
Absolutely.
COVID-proof.
Yes, you must COVID-proof your current business. You must redesign your business model, for example, such that you are able to do an end-to-end from the acquisition of clients to the provision of services to clients to ongoing monitoring of relationship, practically all by digital models. Of course, we're also encouraging that the point that Andrew has made is that money is going to be scarce on the table. And fund providers and investors are going to be very picky and choosy as to where the new funds go. So this is a time to get your governance structures right. This is a time to do the extra mile in terms of, governance, for example. And another thing that I think, especially SMEs, MSMEs should be looking at right now is their brands. So your ability, now that you can't have marketers out there all over the place, you yourself can't be all over the place. The ability to distinguish yourself amongst all the providers of the goods and services you are providing by the quality of your brand is going to be very important. So whilst on one hand, you're supposed to be saving all the money you can save and not making any new major investments, you better be investing in building your brand and digitizing your business. So those are some of the initial thoughts that I will share at this stage. Thank you very much.
Thank you so much, Toyin. That was well captured, and the recommendations so far has remained consistent. COVID-proof your business. Innovation is key, and always try to ensure you have a good corporate governance structure to guide the firm you're running and to make sure you are presentable for potential banks or financial services firms to give you the finances you require for your respective businesses. Now, I'm not going to go to George. Instead, I'll go to Sadia. Sadia, please share with us some of your experiences and what recommendations you have at this stage of the discourse.
Mm-hmm. Thank you very much, Prof. So to kind of give our experience, I think it's helpful to give the background of Urban Shelter. Like you mentioned in the introduction, so Urban Shelter has a 30-year history behind it in real estate, and this includes anything from residential property from $4 million to all the way to $500,000 to commercial, retail, mixed-use developments, and in fact specialty projects as well. Now, traditionally, whenever there's a hit or a slowdown in the economy, the first thing to actually suffer is real estate, and this has happened. Whether it's 2008, which was the catalyst really, and then more recently 2015 as well. And we're going through that third cycle now to say what that downturn is looking like for us. Now, I can't claim to, we're not an MSME, so we're not facing the same challenges, but certainly there's a similar vein in terms of what's going on. And that kind of comes to the matter of funding and what that means. What we're doing is, and because I guess we built up that resilience over time, being able to anticipate liquidity issues, being in contact with financing partners, which again have been the traditional commercial banks. These are investment banks and commercial banks that we've been in touch with for years and years and have developed kind of this partnership with them, and they've come along with us project upon project upon project. So interestingly, in terms of Urban Shelter and the financing angle, that actually still remains. So in January, February, we had signed on term sheets, and they both look like they're still going to come through. And that's a huge relief, I have to tell you, because I've been on the general manager of finance to say what's going on. So it's comforting to know that still has potential. But I think also going beyond that, you are fully in control, I think, of what expenses are under you, but not necessarily have control of your access to financing, access to capital. So what we're doing is, this is 2020 was going to be this year that was going to make us in terms of, getting us all across Nigeria. In terms of context, again, we're running 12 projects at the moment. We have 12 projects across Nigeria. We have 2 in Kaduna, we have 2 in Lagos, we have 1 in Niger State. We actually have about 8 in Abuja alone. So this was the year that was going to really push out, the commercial tower was going to come up, the mixed use UTC in Garki and so on and so forth. Waterfront development was going to come on. So what we're doing is kind of reimagining and rephasing. Again, along what Andrew and Madam Toyin just mentioned about reinventing. Ours isn't so much reinventing, rather it's looking at how we schedule projects in terms of what that kind of risk return will be. What you're trying to do is make every Naira count, make every Naira more efficient for you, because suddenly now, what do you put that Naira into to ensure that you are COVID-proof for 2020 and then re-emerge in a much, much stronger position come 2021, where then you can take on more risk, more exciting projects, and then grow from there. So what we did is to kind of have this crisis meeting to say, well, what do we push to 2021? Let's assume 2020 is just going to be, and it's certainly looking that way. It's going to be a very tough year, very dramatic year, both in terms of health, in terms of financing, in terms of people, projects. To say we'll do our regular bread and butter, we'll continue that. More exciting projects that might carry more risk, that might need more heavier external investment, perhaps even international capital. We'll push that to next year. And that's because, again, as both the previous speakers have mentioned, that there's going to be this very difficult vying and struggle for very limited pool of funds. Because, you're in a situation where it isn't just Nigeria that's going this, it's not Africa that's going this. You have the whole world going through this situation. And in which case, there really is going to be quite a fight and a struggle. Now, I want to speak too about what I know about Urban Shelter, and that's its people. But Urban Shelter is a micro image of Nigeria as a whole. So I want to speak about the resilience about Nigerians, the perseverance of Nigerians, the commitment of Nigerians. Nigerians, each individual, Nigerians drew Nigeria out of this economic slump 2015, 2016, that we were finally beginning to get more comfortable 2019. Sadly, obviously, that now has been completely impacted into a downward turn. And I'm strongly of the view that, again, kind of getting out of this, again, will come from MSMEs. Why? Everybody became in that 2015, 2016, some kind of a medium, small business owner. You suddenly had friends, family, everybody was starting some kind of business. We all became entrepreneurs. Well, I couldn't, unfortunately. I wish that was on my mind. But certainly you could see it. And I'm sure if we went down these panels, they'll tell you, oh yes, 10 people opened up X and it's going well, it's small, but it's paying the bills. So it's to encourage that. We also had this slogan at the time, this kind of real emphasis, or rather a policy thrust perhaps by the government about made in Nigeria. Buy Nigeria, make in Nigeria. And I think that ethos has to be reinvented again so that we know that we're buying from each other, we're recirculating that money. Now, the next question will be, well, where does that money come from? And I think I completely agree that because the traditional forms of lending are going to be so very difficult, you then have to start thinking, not even necessarily outside the box. Because one of the good things when you have economies ahead of you is to say, well, what are they doing that we can copy? How do we get around things? And again, the panelists are all heavily finance-based people, so they might not like it. But I think certainly there might need to be a slight shift away from kind of the middlemen of financial institutions, I think might be an issue when it comes to the very lower scale. People like Urban Shelter will still be committed to them because of the large scale funding we do. But I think at the lower end, you might have more, we might be witnessing, and I certainly hope, that we're witnessing more of this kind of, peer-to-peer lending, platforms that are bringing on board investors, and borrowers together, and you're able to see a bouquet of projects that you say, okay, I have 500,000 Naira, so I want to go into that particular pure water business by Prof. And suddenly you have this platform that kind of, puts you together, someone across, I'm in Abuja, someone is in Aba, and we're actually able to get business done without kind of too many regulations, across it. Social lending, again, this is just, individuals, I know so-and-so, you know so-and-so, and we try and pitch. Angel investments and venture capitalism has been quite along for quite some time, but I think they're more actually now edging more into kind of a formal sector lending. Something we never do in Nigeria, or rather it's very rare, is crowdfunding. There's no reason why now, raising that sum of money from a diverse number of people. If I were to get 5,000 Naira from 1,000 people, imagine what that can do for my small scale tailor shop, imagine what that can do for my catering business. So I think we have to kind of look at that. I think it'll have to be driven by kind of this private equity in its different, private capital in its different forms within Nigeria, because there's already a vying of money across the scale internationally. So that's kind of just my tidbit in terms of MSMEs and how they can start looking at that. In addition, of course, to what all the other panelists has mentioned, Urban Shelter is in a slightly different boat. It's not a bad boat. It's I think also challenges brings out, excuse me, the best in innovation, the best in character, and I have faith in the Nigerian people. That's it.
Thank you so much for sharing that, Hajiya. I think that was a mouthful. Actually,
sorry, I speak too quickly, by the way.
No, you're perfectly fine. You're perfectly fine. You actually answered some of the questions that some of the participants or audience members are actually throwing, because I have a ton of questions here right now, and I'm trying to filter to see which ones to pick and pull out. But before I do that, I cannot move forward without talking to my good man, George. George, you are representing FCMB right now. Please share with us some of the transactions you're seeing, if any, what challenges you're experiencing, and what solutions are you recommending for the SME space, or should I say MSME space? George, over to you.
Thank you so much. Permit me, I would like to share a few slides. I won't take too much time. Before then, I think in the first 1 week, was it 5 days, Lagos State announced the first lockdown. And interestingly, what we saw was close to a 40% drop in transactions, across the whole network. It wasn't just Lagos. And immediately we realized that most SMEs might not be able to meet their obligation, particularly those the short-term loans. So the first we did was to give them a 30 days moratorium, which have now extended. And up to now, we've seen quite a lot of changes in the way SMEs do their business. And somebody mentioned about Eco Hotel now doing delivery. And interestingly, a lot of restaurants are doing that. But I mean, I had some discussion with some owners of restaurants, and one of the things I picked out was like, they are doing that about utilizing 10% of their capacity, which is what you're seeing. Majority of SMEs have a fixed and variable costs, okay? And they're really not making sales, but they still have to maintain those costs. They still have to pay salary. So even when the business opens, a lot are doing a bit of online distribution. But the impact is that they are having a low capacity, and that will eventually lead to them run out of cash reserve in a very short while. You know, we are seeing a lot of disruption in supply chain. And interestingly, we are seeing a lot of demand for local alternatives, which one of the reasons why you see a bit of growth in agri-space and in healthcare. So there are, and in logistics companies. So there are companies that are doing well during this period. And honestly, we are looking after them and chasing them to lend them money. We are seeing new players in the yes. We are seeing new players in different spaces, okay? And which means there's need for rapid innovation and quick adoptions, you know. And of course, the home is becoming a hub. You know, you work from home, you school from home, and all of those stuff. So all of these things means there are challenges and also opportunities. Unfortunately, these are the kind of challenges that most underwriters are usually not very comfortable with. You know, but on the other side, we regulatory and government have done some interesting stuff. We've seen reduction from CBN loans. We see the health intervention fund. We see the 50 billion naira for SME new fund. And interestingly, they've been close to 3.6 billion naira liquidity injection to the banking sector using just the CBN policy. So the liquidity is there, but the challenge is actually, and there are also different kinds of funding sources. I have quite a long list. And interestingly, on the grant side, we are seeing a lot of foundations and DFI being very hot when it comes to health, education, and digital channel, you know, if you can deliver something digitally. So there are quite a lot of grant activities around those space. Of course, there are all lots of vehicles you can use to get loans. But here is the problem with SMEs. And when I speak to SME about lending, I often use a common sense approach, because that way you're able to communicate better. And the next slides I'm going to show kind of trying to explain the reason why SMEs most times are unable to get the funds they are looking for. And if you really want to borrow money, you need to be able to understand this and deal with that. Now, when we looked at fund in Nigeria, I used to put them under two categories, but now under three. Is often around affordability, often around accessibility, and sometimes purpose. You know, and when you have these three intersect coming together, for that's able to get funded. For affordability, you know, for most underwriters, they are looking at your financial analysis to see where they have the capacity and all of those stuff. But for the borrower, looking at the cost, you know, which is one of the reasons why the intervention fund becomes very attractive to most SME, because for them, it is affordable. But what they don't see is, because intervention funds sometimes have a maximum margin for the financial institution, so they can't afford to take more risk. So what they do is that they make sure they give it to people that be able to pay back, so they can keep the cost of risk lower. So that affects accessibility. So why there's an intervention fund, you can't access it because, you know, you probably not perceive as a very quality borrower. So there's also purpose. Most times there's an alignment. Some institutions will want to fund trade-related transactions, some want to fund asset-based kind of transaction. So understanding how you combine all of these things helps you get the kind of fund you're looking for. You know, so in my discussion with most SMEs, I try to ask them, what are you looking for? Sometimes it might make sense for you to, for example, you have a working capital need, you have an asset acquisition need. It might make sense for you to borrow for asset acquisition and use the cash you have for working capital, depending on who you're talking to. So they need to understand this kind of stuff. And if you put this thing into practice, and what it's going to show you is the likely sources of funding post-COVID. You know, the first one we are going to see is a blend of bank loan with some de-risking tools. Like I said, if you look at the outlook introduced some form of speculations. A business that used to do well, his business model has changed. your lenders are going to get worried. Are you sure? We are looking for track record. This is not the track record we know you with. Do you understand? So one, wait and see if you make a bit of progress. How do you mitigate that? Look for the risking tools. There are quite a lot of them. I know DBN have one, the impact guarantee stuff. So risk sharing is a form of mitigation. Insurance could be one. If you're in a business whereby you have some kind of rented service, income, nothing stop you from ensuring that. And once you ensure that, you give the bank an alternative secondary payment that is almost guaranteed, so you can get the kind of fund you're looking for. And that's what we are seeing is data-driven lending platforms are going to grow. We see quite a lot of them late last year, and they are growing very quickly. There are quite a lot of platforms or digital ecosystem where there are access to market and liquidity all embedded. And what this does for you is either give you an instant payment for the service you deliver, or it has a form of prepayment. And this shortens your cash conversion cycles and make cash available upfront. So you don't really need to go talking to bank. Venture capital is going to grow. It's going to grow because we looked at last year alone, Nigeria fintechs raised about $1 billion, in venture capitalists. And there might be delay because of this COVID, which means they're going to need a bridging fund. And with all of this demand, somehow somebody's going to figure out that is the right place to go. So venture capital debt is a way to look at. And I'm happy talked about crowdfunding. We have quite a lot of them, but I think this is also an area where people can begin to, if you're into neighborhood kind of business, a community kind of business, bringing people together, how they be a solution for a common good. That is a very good opportunity for crowdfunding, whether it's reward-based or pure equity. So for me, understanding affordability, accessibility, and purpose, you can leverage any of these 5 potential approaches to get the fund you're looking for to grow your business post-COVID-19.
Thank you so much, George, and thank you for taking over my screen, albeit temporarily. Here's the deal. You've heard it here, folks. Different ways to access credit, different things you need or tools you require to actually ensure your business is COVID-19 proofed. But more importantly, though, I wanted to actually segue into the alternative financing for MSMEs post the COVID-19 lockdown, specifically on where to get funds from. But George kind of stole that from me. But let me try to recapture some of the things he said. First of all, I think Hajiya mentioned P2P lending. There's crowdfunding, of course. Let's not forget other DFIs that may have funds out there, but there are grants out there, which George has mentioned. George mentioned there are tons of grants out there. Chiefly among them, there's this for the healthcare sector. For those of you guys who are in the healthcare sector right now listening, there's the Global Health Fund. That's one. And for all sectors in particular, you have the Jack Ma Foundation. I think he has a $10 million fund for all African countries who need to access grants for their business to grow and so on during this pandemic. Let's not forget the billions of naira out there in the CBN through the NICEL Microfinance Bank for COVID-19 fund. And also let's not also forget, you have other funds out there domiciled in CBN, such as the MSME fund or AXME funds and so on. But those are some of the funds available and some of the grants available too, off the top of my head. And of course, George had eloquently presented that for those of you guys who are watching and viewing his slides, but more so, he mentioned it, okay? But without dragging this much further, I would like to go into Q&A right now because I have so many questions from the audience members, and I want to start reading them out and shooting it to the right people. George, are you still here with us?
Yeah, I'm still here.
Toyin, are you here with us?
I am here.
Andrew, are you still here with us? And last but certainly not least, Hajiya, you still here with us? Oh, perfect. So this is a softball question that I saw come up, but I would like to read it out. Let me start with George, because George is our commercial banker on the panel. He has given us the eloquent presentation, so let him answer this question for us. Having said that, so based on what you've seen, we know Andrew had alluded to the hospitality sector has taken a hit, restaurants taking a hit, hotels, of course, taking a hit. Let's not forget the travel and tourism sectors. They've taken a hit too. So the question simply posed by this audience member, Mr. Aliyu Ibrahim, if you're out there, here's your question. Which sectors of the economy are likely to recover the fastest and which the slowest? I'm guessing this gentleman is trying to stay out of the ones recovering the slowest, but go ahead.
Is that for me? Anyway, what we are seeing, looking at the trend, obviously, agri seems to be doing very well. Healthcare seems to be doing very well, particularly those in drug production and distribution. I'm not too sure about the hospital themselves, but healthcare general seems to be doing well. We see logistic companies do well. IT companies are fantastic now. And I mean, look at what we are doing. The telecommunications, I mean, they are printing money, you know, and all of those stuff. So, like you said, hospitality is going to be a big issue, you know, and we don't know how that's going to play out. But for me, I think for a business person, even in a very dark period, if you're innovative, you can find a soft spot. So I don't think you should just in terms of, yes, you might take opportunity of certain sectors, but think in terms of what solution are you going to provide? Do you understand? So where the certain sectors might be having a challenge, that means they have a problem, and that means somebody can actually provide a solution. So if you're taking technology solution to that space, probably might be turning things around.
Okay, fair enough.
There's no.
Let me shoot this question off to Andrew. Andrew, I know you talked a great deal about what governments are doing because you're seeing it from a continental perspective. So what specifically can you envision that the government is doing towards ensuring that the non-oil exports are targeted towards growing the GDP and overall the macroeconomic stability of the country?
Yeah, well, you know, non-oil exports is a subject that has been spoken about, I believe, for about 30 or 40 years, as long ago as I can remember, to be frank. And unfortunately, the noise gets loudest around now when we have these problems with oil. But you know, as soon as the oil money starts to flow in any kind of volume, we forget about it, at least on a national basis, because it is, you know, oil in a way is a bit like crack cocaine. You know, you get addicted to it, and it's very hard to wean yourself off. It's very early in the crisis now. But I'm hoping that and I can see some signs that what has happened with oil, and I think, you know, about a month ago, oil prices in the US were negative. You know, i.e., you as an oil producer had to pay people to take the oil away from you. Now, you know, that was for very technical reasons and limited to certain types of oil. But, you know, I hope that was a wake-up call. And I can see that there are some early signs that we are trying to do some things. You know, the second part of this crisis is that it has forced us for the first time in many years, if not in forever, to borrow money from the IMF. You know, now we borrow that money under an emergency program, which doesn't come with the normal IMF reform program, but it does come with the
you
promise
mean the conditions.
Yes, so it doesn't come with the long list of so-called conditionalities, but it does actually come with a promise that we will talk to the IMF on a serious basis about solving balance of payments problems. So it's not a long program of conditionalities, and you can see some of those things coming through. So, you know, talk about ending the oil price subsidies being one of those things. Now, unfortunately, the sort of things that we're going to need to do to wean ourselves off this oil addiction typically won't be easy, and will be things like ending the oil price subsidies and rediverting those funds into areas where we can get more productive growth, like healthcare and education. And this is why it hasn't been done in the past, because it's not something that's easy to do. And so, there will be some painful things that have to happen. And, hopefully the crisis, although, really you should have done these things before there was a crisis, so you're well positioned going into it. Sometimes you need crises like this to make you do those painful things. Thanks.
Never waste a good crisis. So as long as
Absolutely.
I have you online here still,
Sure.
Andrew, and I know Toyin and Sadia had mentioned this as well too. So maybe I'll get different perspectives. First from you, sir. So you had mentioned that now the time to look at raising equity for businesses. Now, so considering the fallout of the pandemic causing shortage of liquidity globally and the fear of investment returns, do you think investors would really want to do equity investment at this time, considering the absence of positive business performances, returns, and falling equity prices? That's just a question from one of our, well, put it this way, a question from the audience member, and I think I'll pose it to you first, sir, before going to Toyin for her reaction, and of course, Sadia for her reaction as well.
Well, I think that you can see, I'll respond in two ways. The first way is to say that I actually see this crisis as not being something, and I mentioned this in my opening remarks, this is not something that's going to end in September. This is something that's going to go on for a while, especially when you start to look at the echoes of the crisis that would happen. If you take the global financial crisis, for example, you could still see echoes of this coming out 5-6 years later, every time you had a crisis in Greece or somewhere. So I'm not looking at it as something which is just going to happen between now and September and then end. So when I'm talking about, so yes, it's true that many providers of equity are not investing at this present moment. But, at the end of the day, what equity investors do is invest, and those that have some firepower will be looking, to make those investments at some point in time. Now, what is obviously going to happen is that valuations will come down. So, if you were expecting to be able to, raise equity for your business at a value of 100, you now have to accept that, that value has gone down, whether it's 60, 70, 80, I don't know, but it's definitely unlikely to be 100 unless you happen to be maybe the owner of Zoom or something. The second aspect of my answer is that is something that Sadia alluded to earlier, which is, around, she talked about peer-to-peer funding and other sources to disintermediate financial institutions. I kind of agree with that, but I just wanted to point out that those kind of things, in a way, are really just putting onto electronic platforms what we have always done, which is that, most SMEs, particularly in Nigeria, have actually really raised money from friends and family and people like that, people they know, people who are peers, maybe peers they know, as opposed to peers on a peer-to-peer platform. And, to some extent, even though that has also dried up to some extent that is, that those sources of funding are still available. And I imagine that, if you're looking for funds in this immediate period, friends, family, those close to you, those with whom you have existing relationships, are where you're likely to find that funding. You're not going to find it from some offshore VC company who hasn't had a conversation with you up till this point, because they're not going to be able to do it. They're not going to be able to travel to Nigeria to look at you. So I think you just need to be very nuanced in how you think about raising funds.
Thank you for that, Andrew. Toyin, your reaction.
Okay, so I'll say that I'm largely aligned with Andrew. Definitely investors are wary right now, especially equity investors and long-term stakeholders. But because funds do have to be invested, and because investors also have a need for returns that in the long term can eclipse the cost, for example, inflation rate. And you know, in Nigeria, for example, and most emerging markets, inflation is rising again on account of COVID-19. So what is going to happen is that investors will eventually cherry pick between opportunities and decide which ones they can take a risk on. Beyond the fact that the valuations are going to be different, they're going to be looking for the industries that these investments are in and how these industries are, likely how these businesses are sustainable in a COVID-19 world. So they're going to be looking for what I call counter-cyclical stocks. So investments, for example, in sectors that are actually growing right now. So the healthcare sector, has opportunities, and some of the stocks of Zoom, for example, the stocks have grown by over 90% year to date. So investors will be very interested in technologies that address the challenges, in industries that actually provide solutions to the new behaviors of buyers and markets and customers. Somebody pointed out the other day that the Ubers of this world and a lot of the companies, the Amazons of this world, most of them came out of the last global economic recession. So there will be opportunities for equity investments, but it's going to be picky, it's going to be choosy, it's going to be specific to industries that are actually growing. And then for you as an SME to attract investments, you're going to have to jump through a few more hoops than you would normally have to jump through. So, we're not exactly an MSME, but I would consider us between small and medium-sized business. And of course, our auditors who are Deloitte are already asking us for the COVID-19 impact. And for us to do so, our audit process that is ongoing now suddenly includes you giving a statement on the sustainability of your business in a post-COVID-19 environment. Those are some of the kind of questions that investors are going to be asking. And so back to COVID-proofing your business again. So you will still be able to raise capital in the buy and buy, but you will need to jump through more hoops. You need to be doing something more interesting. For me, I kind of feel that for businesses that have a current business line that you can sustain and COVID-proof, but then you can pivot into something more interesting, you're going to need to be able to marry those two profiles for you to raise capital. So essentially, the fact that you've done something well and done it consistently over time, and now you are, moving into a new area that is not entirely new, but that you are just pivoting. Kind of some of the examples we've discussed earlier today, such as somebody who was providing alcohol and is now moving into sanitizers. So those kind of things, So that's my perspective.
Thank you for that. Hajiya, you want to add to this, or you're okay with all the comments?
Just a quick one, Prof. I don't know why, maybe I am being overly optimistic. It's just, you painted a picture for us, and it's actually what we are witnessing. So you've got rising inflation, you've got low interest rates, you've got volatility in the commodity prices and things, you've got exchange rates going haywire. If you have a load of equity, and like I think Mr. Andrew mentioned, you're sitting on money, and again, reinforced by Madam Toyin, it isn't to leave it in a bank or under the mattress. You are actively going to go and see where the highest return is going to come for you. It's just it's the obvious thing to do, so long as you plan on making money. And yes, you have to look at this as a long-term thing. It will be incredibly slow and painful. That is in terms of for the businesses. But I think as an investor actually sitting on money, I think this is probably going to be a very bullish time for them, so long as they are going to be able to make the extra checks. And on the other side of it, the businesses will go through more hoops, like Madam Toyin has mentioned. But ultimately, I think, financing MSMEs is going to provide, a really attractive risk reward profile. I think it's going to support the real sector economy, which is exactly what we need. And this is, what will be kind of almost the building base of what gets Nigeria out of what it's going through. Investor gets a huge asset base, hopefully, on this in addition as well to the return they experience. So I think it's actually going to be an obvious choice. I think it's just very much in terms of making sure all the T's are crossed and all the I's are dotted to ensure that, yes, you are investing into something worthwhile. Yeah.
Well, thank you for that. So now I'm going to pivot a bit. I'm going to ask a question or paint a picture. So there's this audience member. He says he's a baker and represents Premium Bread Makers Association of Nigeria. The prices of baking ingredients like flour, sugar, and so on have gone up by more than 40%. That's inflation, people. And this is leading to shutdown of our member bakeries. We cannot have that. How do we secure funding for running costs to avoid more bakeries going under? This is the simple request by this gentleman, Emmanuel Onora. So please, FCMB, George, can you please share with us your insights on this before I piggyback off what you say?
Okay, interestingly, he's in a very attractive sector, the essential food, so, and if the price of goods are going up, I would believe that means that he's selling. So he just need more working capital. So probably his cash flow has not been impacted. And as a bank, if I look at his cash flow during this period, and he's not declining, he's actually a very good prospect for lending. The bank with FCMB, I'm sure he can get money very quickly. And I know we are looking for people like that because, like I said, for different businesses, this will be different. For somebody who owns that kind of business, this is actually the kind of people. And remember, the CBN loan to deposit ratio policy have some level of pressure on banks to lend money now, and so the challenge is actually to find good business you can lend to. And for me, particularly for this particular customer, he's in a very good sector. The other challenge he might be having might be he might not, that issue of accessibility I talked about, he might not have made the lending requirement, maybe the collateral requirement. But if it's working capital that he needs, and he banks with FCMB, we have unsecured loans for SMEs up to 10 million naira. And for me, if you're an FCMB customer, this shouldn't be an issue. We actually have a quick loan that he can apply and get funds in less than 48 hours. And the application can be done online, through his internet banking. So for me, he shouldn't be having a problem if what you just said is exactly what it is.
Well, I read it as he described it, so I believe that's how it is. Also, there's another question from Olushola Ogunshola. The question goes like this: sustainable growth post-COVID will mostly be about partnerships. What is DBN's position on providing guarantees for availability in healthcare sector and social projects? I'll answer this quickly, and Olushola, to be sure, DBN, I mentioned in the beginning of the conversation that we have a wholly owned credit guarantee company, Impact Credit Guarantee Limited. We issue guarantees for loans. So just go speak to your bank, Shola, get a loan from your bank, and if your bank is so inclined to get some sort of guarantee, speak to Impact Credit Guarantee Limited, please. That kind of answers that question. I have other questions now regarding crowdfunding. This gentleman, or anonymous actually, crowdfunding is an interesting idea, concept for SMEs. What is the CBN and other regulatory barriers that must be reviewed or changed to make this effective? And you know something, this is actually a valid point, or question rather, because in this time frame, I would imagine there will be a lot of, if you like, fake institutions coming up and providing or volunteering their prescription for solutions for their financing challenges. Now, one, we have to be wary, be concerned. Don't go to anybody and ask for a loan. But specifically though, I think we have to take a look at a way to guide the conversation regarding the regulatory barriers, if any exist, regarding crowdfunding. Because in the past, if you recall, I know anybody who took finance, where you go to secure loans first is your family and friends, right? Then you go to your bank and so on and so forth. But if crowdfunding is really a thing in Nigeria, what firms exist, or what is the platform that exists that allows this to happen? And if so, how effective is it? George, are you still with us? Because on my screen, I see you're frozen. I don't know. Toyin, are you with us?
You, and I'm very happy to answer that question.
Please, Toyin, go for it.
Okay, so I'm pleased to let you know that the Securities and Exchange Commission has actually rolled out and approved rules for crowdfunding in Nigeria, and crowdfunding platforms are also authorized, and these are existing SEC registered platforms such as the NASD. It would, for us, I think one of the major opportunities in a time like this is for the capital market to come to the aid of businesses by providing long-term, appropriately priced and sustainable funding for businesses. And the capital market is a veritable opportunity through crowdfunding. Incidentally, also, the Nigeria Stock Exchange recently launched its growth board, and the essence of the growth board is to allow smaller businesses who would not ordinarily meet the listing requirements of the Nigeria Stock Exchange to be listed on those growth boards. So there are a lot of opportunities in the capital market. And of course, at the Emerging Africa Capital, we provide advisory services, and we also take issuers to the market. And it will be a pleasure to take anybody who's interested in raising funds through these alternative methods to the market. Thank you.
Thank you so much, Toyin, for that. George, a question came from someone from the audience asking for your slides. They thoroughly enjoyed it. So if you don't mind sharing your slides with us so we can get it to the respective parties for proper digestion, that'd be great. So Balahan, an audience member, is asking Toyin specifically, who are emerging African capital's typical clients? Do they support import businesses? Toyin, you seem like you're on fire right now.
Thank you. It's a pleasure to answer that question. So we are sector agnostic, and that means essentially that we advise and raise capital for clients across sectors. We are also able to advise and raise capital for governments, both sovereign governments and subnational governments. So my typical client is you, if you have a viable business and you are prepared to be structured and to be disciplined, both in terms of how you manage your finances and also in terms of the governance that you put in place. It will be a pleasure to work with you. And I think that businesses, especially at this time, need professional hand-holding to be able to source capital. So rather than walking in, of your own to an institution, you need to have professional advice, helping you to know precisely how much funding you need and how it is best structured, and possibly even also picking and choosing between alternative fund providers, because that's part of what your financial advisor will do for you to ensure that you are getting the best terms and you are getting the best funding for the longest term, which is what we need. We all need patient capital and appropriately priced capital at a time like this. Thank you.
Thank you so much for that, Toyin. I have a question for Andrew, and perhaps if there are any follow-ups to that, maybe our panelists could chime in, Sadia or George, if you like. The question is simply put this way. If you would advise, what capital mix would you suggest for the typical MSME? I know it's a very broad question because there is no so-called typical MSME. Nevertheless, the capital mix is truly the question here. So, Andrew, if you don't mind, share with us your recommendation for a capital mix. It could be by sector or what have you.
So I would think of it like this. So the first thing to do is to understand the different types of capital and what they really mean. So debt capital, basically, you are borrowing money from the person who is providing that capital, and you are expected to pay that money back 100% with all the interest, and they don't care what else is going on. And I'm kind of exaggerating to make the point, but they don't care what else is going on in your business. They just want to be paid, and they have, you have a legal obligation to pay them. And if you can't, then they can take your business away from you. That is a very succinct way of describing it, and there are bells and whistles that can be added on. Now, equity capital is different. Equity capital basically means that everything else gets paid, and then whatever is left gets shared between all the owners of the equity capital, including yourself as an owner, and including the people who have invested in that equity capital. But there is no obligation for you to pay. So if there's no money, you don't pay them, and they can't come after you. Again, I'm exaggerating a bit and simplifying it, but that's how it works. So from the point of view of the investor, the loan is more secure, is safer, because they know exactly what is going to be paid, and they know that you are obliged to pay that come what may. The equity is more risky because they don't know how much is going to come out, and you don't have an obligation actually to pay them. So the people who are investing the equity are going to expect to make more money than the people who are investing in the debt for the same level of risk and everything. So that is why debt is cheaper than equity in some ways. I mean, you may not think of it that way when you look at interest rates, but anyway. So the point is that you need to think about your business's ability to generate cash to service these types of capital. So if you're just a startup, you don't know where your money is coming from. You're trying to sign clients. Maybe you're already it's a bit difficult to pay salaries at the end of each month. You don't want to take on an obligation like a loan, where you're obliged to make these payments, and if you don't make the payments, there's wahala. On the other hand, if you're a mature business that's doing well, generating enough cash to cover all of its obligations, then you probably don't want to be raising money with equity, because you're giving a share of your business to the equity owners, and they're going to demand quite a high return for that, because you have enough money to service debt. So that is the first lens that I would put onto your debt to equity ratio. So if you're a young business, if your cash flows are uncertain, if you're facing COVID problems, etc., and you have the choice, and having the choice, and I think the point Toyin made earlier about it getting more difficult to raise money from, let's call them institutional investors, I think that's absolutely true. Then if it's those things, I would prefer actually equity over debt. If you have a more established business, if you have visibility into cash flows, then I would prefer debt over equity. So I think that rather than trying to get too prescriptive, I think that is the lens everybody should look at these things through when considering this. Thanks.
Thank you so much for that, Andrew. I couldn't have said it better myself. Does anybody want to follow that, or are we okay with that response? Hajiya, are you with us? Hajiya is okay. Toyin, you're okay. George, you're okay too. So let me jump right into the next question. I'll take one or two more questions before we round up. I'll kind of summarize, then we'll say our goodbyes. This one is from Bumi Lawson. She directed the question directly at Hajiya. Hajiya, great idea on crowdfunding, especially for real estate. Imagine putting up a flat for sale, crowdfund the purchase, and all members earn rent and share capital when it is later sold down the line. Share profit. I think it may be an innovative way for real estate market to survive the economic downturn. A real estate crowdfunding platform is a great idea. Is there a legal framework for that in place right now? That's a direct question.
Yeah, can I have her details? I like her. I think she might come and work under our finance and investment team.
Boom.
So yeah, let me get her details out of this. So it's something that we've been looking at internally. I think actually before this, one of my, so we have a whole arm, and it includes actually a hospitality arm. And the gentleman that runs that, Aliyu, is phenomenal in terms of finance. And he's been talking to us about kind of coming up with a specific crowdfunding tool that specifically addresses real estate and real estate assets and how investments are put in and what the exit strategy would be. And again, this kind of puts the question also REITs, which was, I think it's been successfully done by just 2 companies a while back. It hasn't been repeated since. And part of it is because we just don't have the proper model that's being used now. Unfortunately, there are restrictions to it. I'm really glad to hear Madam Toyin said actually crowdfunding regulations now have been put in place by, is it SEC? They've not got regulations that would allow crowdfunding platforms to go ahead, and it'll be really nice to actually see it specifically being done for real estate assets as well. So it's something that we've started putting pen to paper over the last 1 year. It's something that we want to go and advocate to, so that we can actually have this tool. I think in particular in this time, you have a number of people that really, they might not be large scale investors, and that's why crowdfunding makes it very interesting. They do have money, but being able to buy a 30 million naira flat, a 10 million naira flat, I think makes it beyond their reach. You've got a rising middle income earners, although that might be a bit more compounded now because of COVID. But again, they're willing to put their money into something more solid because of the returns you get on real estate investment, rather than just kind of having it sitting at the bank, with inflation eating into it. It would provide a really big response. So it's just to sanitize what that would look like in terms of what the process is, in terms of trying to make sure that the guidelines can accommodate kind of pushing crowdfunding specifically to do with the real estate asset. It's good. I'm sure it will take a while, but the wheels have started turning. It's to do an advocacy, a position paper, and hopefully get it regularized through the right government authority and channels. But great idea. Yes. Basically, it's on the table. It just hasn't yet been approved yet.
Great. Thank you for that response. And Bumi, I think an open live offer is given to you.
Yes,
please,
let me have her details, please.
Send me your details, Bumi. I'll give it straight to
Yes,
Sadia so you guys can continue the discussions.
Yep.
Okay, so this is the final question. It's on education. Education is a big passion of mine, the education sector in particular. Over the years, we've seen a downward trajectory in the growth of the education sector. It hasn't been growing as one would imagine. On the one hand, you see a lot of private institutions coming up, whether it's the creches, whether it's the elementary schools, high schools, secondary schools, and private universities. Now, this is basically a health pandemic turned economic crisis, which has ultimately essentially squeezed out the lifeblood of some sectors in Nigeria. Does anyone have any thoughts on the education sector, if and when it's a right to go back in, how we can manage the growth of that sector? I don't want to be too prescriptive because I can talk all day. I would rather my expert panelists chime in 1 or 2 nuggets for the audience member who asked this question regarding the education sector, because clearly it's hard for loans to be channeled there at this time. And if you remember, we're in a lockdown mode. So it's kind of hard for this face-to-face contact to happen. So any prescriptions you may have, panelists, Toyin, please go for it.
So my candid opinion about education is that this is an industry that is long overdue for reforms, for drastic reforms, and this is a global imperative. And this industry had essentially been waiting to be disrupted, and COVID-19 just successfully did that disruption. So the huge investments that we make to travel far away from home to very unfriendly and unusual environments, to spend a huge amount of money for the purpose of getting our children educated, is simply a waste. And COVID-19 has made us understand all of a sudden that people can get an education from anywhere in the world. So I think online education and digital education models are the way to go. And that's how that industry is going to recover, rather than going back to exactly the same thing the way we used to do it, unsustainably expensive models. And I think institutions like Harvard Business School have known for quite a while that traditional education was going to be disrupted, and that's how they came up with the HBX model. I'm aware also that the Lagos Business School has also been working on alternatives. So it's overdue. The education sector must be. I was speaking to an education sector founder earlier today, and we were discussing how she needs to give all the parents alternative models and alternative pricing. It's a sector that needs it's overdue for disruption and for a change in the model. And of course, you need to remember that education ideally should be available to everybody everywhere. And so the digital model enables us to do that. And for Africa and places where we have this huge gap, online and digital is the way to go if we can fix the infrastructure issues.
Tony, I couldn't agree more with you. But however, Andrew, please chime in, yeah. Andrew, go ahead.
So I think that just to add to that, and to take maybe a bit more of a macro view, because we were talking about diversifying Nigeria's economy and all that a bit earlier. In my view, the biggest resource actually that Nigeria has is its people. It's not oil, it's not palm oil, it's nothing like that. It's not some mineral in the ground under Jos or something. It's actually our people. But in order to harness those people, we need to educate them. And again, I think that I fully agree with what Toyin said, that the COVID crisis has both shown the weaknesses in education, has disrupted it, but has also shown the way forward. I mean, my daughter, for example, from 8 till 4 every day is, going to school on Microsoft Teams. And, I don't know that it's as good an experience as being in a classroom, but, she's learning something and it's happening. However, education at the end of the day, yes, there's a lot that can be done from an entrepreneurship perspective on education. But at the end of the day, this is one of the areas where the government needs to intervene. And I really believe that the government, meaning all levels of government that are involved in education, really needs to look at the paradigms under which they try to move this forward. For example, you cannot start an online university in Nigeria. To be a university and be registered with I think it's the Universities Commission, I'm not quite sure the regulatory body, you actually need to have, certain number of thousands of hectares of a campus. So, you can be an existing university and go online, but you cannot start as an online university. And in a way, universities and postgraduate type of courses, to my mind, make themselves are more readily made online than a lot of the early primary education where interaction is needed, so you can see how the children are responding to the lessons. But to me, I think as a country, this is a major potential opportunity which we need to grab with both hands if we're really going to develop ourselves in the future. There are a couple of people who are, already doing some very innovative things. A friend of mine called Sim Shagaya has launched something called U-Lesson, which is sort of mobile way of learning for the SS3 type level exams. And I think he wants to do more of this, and it's aimed at people who don't have access to smartphones. But that's just one model, and I think that this is a place where we can innovate. I think this is a place where we can render things, and I think this is an area where we can really move the development of our country forward with alacrity. Thanks.
Wow, that is very
can I say something here?
George, please chime in a few minutes, please. Just chime in before we go into final words.
This is an interesting an area. Even as a bank for more than 10 years, we've had some special product for. I don't know how many of you know how many private schools you have in Lagos. There are over 11,000 private schools in Lagos. So And education is a social service, pretty much like maybe healthcare. So if I look at the data, some of the stuff we've seen, just looking at, we had a product called School Ed, and we are keep on secure lending to schools to be able to prepare them for the next time. We've done this for more than 10 years. And the NPA has been estimated very low. But there's a big difference between the schools at different neighborhoods. And I think after about 5 years, one of the things I found out is that it's more of an issue of standards. So even before we start going online, there are really no standards. And I know we did try to work with some DFI to say if we can even have some form of standards. Even in terms of the loan, we found out that for some we can't give them loan because even the the right kind of documentation to even run that school. So you don't give a loan to a school, So the biggest issue we have, and I think as Nigerians, we need to be more careful when we adapt. I think to deal with education, government needs to really come in and deal with the issue of standards. It's only when there's a standards we can then begin to talk about going online. Yes, everybody's going online, but what are they learning? For what purpose? So I think education goes beyond just online. In Nigeria, things need to be done in terms of standards. Thank you.
Thanks so much, George, because I think
Sadia, please go
sorry.
ahead.
Yeah, just a really quick one to say education is such a sensitive subject because one, you're looking at an investment in an individual that would span 20 to 25 years. So it makes it really difficult. And I think that what George touched on is brilliant because that's exactly what I wanted to say. You're looking at Lagos. I think once you even expand that to Nigeria, because as you can see, the name, the look, I'm a northern lady. So issues are further compounded the further up you get. So you can't even talk about online classes when the basic book isn't available in classes. So it's something that really kind of inspires fear in me, sadly. I don't have a solution to it, but I completely agree with you that a huge government intervention, kind of really pushing people like universal basic education, SUBEB to come on board, and hopefully private sector that can hold that government accountable to say, okay, we want to have a standardized approach to education across the board, across the country, whether you're from Aba or Niger or Sokoto or Ilorin, everything has to be done to make sure that no child is left behind, because whether we like it or not, we are only as strong as our weakest person, and at the moment it just isn't looking great. Thanks.
Excellent submission. So we've been talking for about 90 minutes now or so. So I would like to close by offering the panelists last words, please. Ladies first. Sadia, I have you, so go ahead. Final words in 30 seconds or less.
Final words is, look, it's going to be a very uncertain world. The good thing is we are all in this uncertain world together. There are no answers. We've had a great discussion for 90 minutes, but really what will drive how we survive this is our ability to adapt to the change quickly, to roll with the punches, to get up, to have faith, to know that as Nigerians, we have resilience, we have courage, we have commitment. Nothing gets us down. We will rebuild. The sun will rise again tomorrow and we'll get going. So I wish all of us every success. I want to thank healthcare workers across the globe because they are putting their lives at risk every day. Thank you, DBN, for putting this together. Great to meet some of the panelists and reconnect with some that I know already. And shout out to Urban Shelter team. Thanks.
Perfect. Toyin, go for it.
Okay, so my final words are to start by saying thank you to DBN for providing this opportunity, and thank you to the participants for listening and participating well, and to the great panelists from whom I have learned a lot. And to say that for any MSME, you want to re-examine your existing business model and make sure that it still works for you in today's environment. That means that it provides an avenue for you to meet your clients, to acquire clients, to serve the clients, and to maintain the relationship with minimal or reduced physical contact. Of course, you probably need to check also whether that is still the line of business you still need to be in, because some lines of business have pretty much disappeared. You also need to look at the skills of the staff that you have in-house and see how adaptable these skills are and what kind of training you need to do so that the staff that you have can remain relevant in a post-COVID-19 world. And of course, you may need to be engaging your current fund providers so that you can avoid default, so that you can extend or restructure your existing facilities. And if you are already in default, even the faster. And of course, you will need professional guidance and support through that process to ensure that you are still getting the best deals. And at the end of the day, is to say, please keep your ears peeled and your eyes open for all kinds of funding opportunities that Development Bank of Nigeria, the other DFIs, BOI, FREDZIM, NEXIM, the Central Bank, NERSL have to offer. And of course, also look for opportunities to raise long-term equity, because really that is what will keep you under a little less pressure at a time like this. I wish you all the best as we all ride the challenges of COVID-19 together.
Thank you so much. Andrew, Mr. Ali, please go for your final words.
Yeah, so I would like to echo a lot of what has been said. I think now is a time for creativity. I think now is a time to be innovative. Now is a time to show resilience. Now is a time to take advantage of all the various things that are out there, including some of the products that DBN offers, because I know that since I'm on the board, I know DBN has been thinking very hard about how to support SMEs with during this time, so we are trying to help as much as possible. When I go through some adversity, there's a poem I like called "Don't Quit," and I think by a guy called Whittier, and I think it's quite appropriate for these times. It says, when things go wrong, as they sometimes will, when the road you're trudging seems all uphill, when the funds are low and the debts seem high, don't quit. It's a longer poem, but I won't go through the whole thing, especially since I'm not very good at delivering these things. But I think, we just have to keep on going. We can't quit because, the sun will rise tomorrow and these trials and tribulations will pass us by. So, I think the important thing is just to make sure that we keep on going. We avoid COVID as much as possible, because unfortunately, I think we're still on an upward trend in Nigeria. So we need to be as careful as possible. I would finally like to follow Sadia and thank all the healthcare workers who truly are putting their lives on the line to try and defend us from this virus. Thank you.
Thank you so much, Mr. Ali. Last but certainly not the least, George, sir, please go for it. Final words.
Okay, thank you. I like and those are quite. I think there's this common sense we keep saying, keeping up. I think for SMEs that this is a time you should be proactive. If you're looking for loan, you have to be able to look at it on both sides and try to start early. Don't wait until the last minute, which is what SME always do. They come to the bank when it's almost too late. Please don't get into default. Somebody has said that it's important to start discussion early enough, because the moment you go into this default, you destroy your options, your name goes to credit, bad debt, and all of those stuff. So, and then adapt quickly. Things will change. Things have already changed, and they keep changing. The ability to adapt quickly is going to keep you up. Finally, not the least, please consider technology. Technology is going to be very, very key in post-COVID. And I think it will impact almost every kind of business. So whatever you're doing, digital is very key. Thank you.
Thank you so much, George. As for me, I echo the sentiments of all panelists here. But for more information, though, I want all participants, audience members, and so on to visit our website at www.devbankng.com, or you can send us an email at info@devbankng.com. Also, in summary, DBN truly does care about the MSMEs. We don't really care. Ideally, we want you to come to us for your funding requirements, but in the end, we truly want all MSMEs to access funds to help build their ability to manage their firms and businesses wherever you may be in the country. So thank you all to the healthcare workers. Thank you all to my panelists. You guys were great. This is the first of what I hope will be many webinars from the DBN. As for me, Joseph Nnanna, I'm signing off. Thank you all. Thank you, world, for staying tuned to us. You guys have a lovely day. Stay safe.
Thank you. Thanks very much. Bye, everybody.